I appreciate very much our witnesses being here to discuss fairness and fiscal responsibility, how we crack down on wealthy tax cheats. As we know, most Americans follow the law and pay their taxes on time and in full. Many of the very wealthiest Americans, however, play by different rules. Empowered by a tax code that is rigged in their favor, they rob the public wheel of revenue and leave everyone else to foot the bill. Today, we will hear how the super wealthy account for a large and disproportionate share of tax evasion and cost the American people perhaps hundreds of billions of dollars every year. Despite rampant tax evasion by the wealthy and large corporations, years of budget cuts hobbled the IRS doing its job. Imagine having to audit a complex partnership network like this if you don't have the resources to do your job. Instead of meeting that need, cuts shrank the audit rate for millionaires by 80%. For the largest corporations, the audit rate shrank by half. In the last year of the Trump administration, people with incomes under $20,000 who claimed the Earned Income Tax Credit were twice as likely to be audited as someone making over $1 million. Tax amnesty for the rich, tax enforcement for the poor. This made no sense and was undemocratic and morally and fiscally wrong. So last year, Democrats provided an additional $80 billion of funding to the IRS over 10 years. Rhode Island's taxpayer advocate has already seen her casework speed up as this new funding dissolved logjams at the agency. The IRS can at last pursue complex audits of the ultra-wealthy and giant corporations through their complex tax avoidance schemes. And it's good for revenue. CBO estimated that our $80 billion expenditure would result in $180 billion in additional revenue, a $100 billion increase. Yet, just 2 weeks ago, House MAGA Republicans turned their Israel funding supplemental into a scheme to reward wealthy political donors by slashing funding for tax enforcement. Of all the people they could have chosen to single out for special benefits, they chose wealthy tax cheats. That tells you a lot about their House priorities. The nonpartisan Congressional Budget Office showed last week this wouldn't offset the Israel spending. It would double the cost of the measure, adding an additional $12.5 billion to the deficit. This should not be hard. Everyone should follow the law and pay what they owe. But they don't. The tax gap, the difference between taxes owed and taxes collected, was $688 billion in 2021. That's nearly half the size of last year's deficit. And that number is low. It doesn't fully count offshore tax evasion, schemes involving webs of shell companies, evasion by big corporations, and other techniques of tax cheating. One study found that the IRS estimate misses $160 billion in annual tax evasion just by the top 1%. Even Trump IRS Commissioner Rettig said the gap could be as high as $1 trillion annually. Dr. Natasha Sarin, one of our witnesses today, estimates that the top 1% account for 30% of unpaid taxes. You heard that right, 1% of the population, 30% of the cheating. It should come as no surprise, then, that auditing the wealthy delivers the biggest bang for the enforcement buck. As a famous bank robber once said, it's because that's where the money is. Dr. Nathan Hendren co-authored a recent study that found $1 spent auditing the wealthy generates $12 in revenue. For those at the very top, the top 0.1%, it may be as high as $36. $36 in revenue for every $1 spent on enforcement signals a lot of cheating. And it suggests that our IRA enforcement funding may reduce the deficit more than CBO originally estimated. $500 billion more over the next decade, according to Dr. Hendren. Let's be clear about one thing. The President has directed that the new funding will not be used to increase audits on anyone making less than $400,000. But if you're a multimillionaire hiding money in foreign bank accounts, or a multinational giant cheating through a web of tax haven subsidiaries, your tax amnesty days may be over. Regular taxpayers will see a fairer tax system and better, quicker customer service. IRS phone service on its main helpline during filing season was up to nearly 90%. Last year it was just 17%. Wait times are down to just over 3 minutes. The National Taxpayer Advocate called the difference between this year and last year like night and day. On the enforcement side, the IRS has already collected $160 million from multimillionaires who the IRS knew owe at least $250,000. One individual had to pay $15 million after falsely deducting personal expenses as business expenses, including a 51,000 square foot mansion deducted as a business expense, fancy cars and artwork deducted as business expenses, and homes for his kids deducted as business expenses. Tell a plumber how somebody should get away with that from the IRS. Some business expenses. But without enforcement, he'd get away with it. And he's not alone. An investigation by Chairman Wyden found nearly 1,000 taxpayers with incomes over $1 million that haven't even bothered to file their taxes. Fully funding IRS enforcement is both fair and fiscally responsible. If you care about debt and deficits, you should want a well-funded, well-functioning IRS. And with that, I turn it over to my distinguished ranking member, Senator Grassley.
Just to explain what might appear to rudeness to our witnesses, I'm going to have to give my opening statement, go to the Finance Committee and offer some amendments, and then come back here and question you. So I just wanted to explain that to you. If someone were to base everything they know about IRS reform from what they hear today, they'd probably get the impression that it's a divisive and politically charged topic. A few years ago, however, IRS reform had strong bipartisan support. In June of 2019, the Taxpayers First Act passed the Senate by voice vote on its way to be signed into law by President Trump. As then chairman of the Senate Finance Committee, I'm proud to have had a hand in enacting legislation that had improving IRS customer service as its top priority. We accomplished this after continued years of reported abuse by the IRS. Now, what's changed since just a little over 4 years ago? The so-called Inflation Reduction Act, jammed through Congress on a party line vote, reversed this course. Democrats abandoned a bipartisan focus on customer service in pursuit of partisan enforcement first efforts. Now, you might get the idea that I like tax cheats. That would be wrong. When it comes to holding known tax cheats accountable, I'll take a back seat to no one. And so I'll refer to 2006 legislation that I offered and authored, improvement to IRS whistleblower program to encourage people with information about high tax dollar fraud to step forward. Now, since that law was passed, we've brought in $6 billion into the federal treasury from these whistleblowers' information, and it has the potential to collect 10 billions more from identified tax sheets. I've been trying to work with the IRS on this whole thing to get them to take this program more serious than they do. It takes some whistleblowers 10 to 11 years on average to get information back. What is the IRS doing with the information that they got? And obviously that whistleblower's interested in that because they get a percentage of what is collected. So efforts to paint one side of the aisle as friendly to tax avoidance or tax evasion ignores that taxpayers of all types attempt to minimize their tax liability in a legal way. Even wealthy President Biden routed income from books and speeches through S corporations to avoid Medicare taxes. Earned income tax credit that mostly benefits lower and middle income taxpayers costs billions of dollars in fraud every year. The overwhelming emphasis upon tax enforcement taken by the Inflation Reduction Act will come at tremendous cost to innocent small business owners and others caught in the IRS audit dragnet. You almost get the opinion, listening to debate in Congress and what you hear from the IRS and Treasury people, that everybody that's a small business person is a tax cheat. My Democrat colleagues don't seem to care about the cost to small business. They're bewitched by the idea that the law created a magic money machine that will only extract dollars from the wealthy and large corporations, but their claims that those earning under $400,000 will be spared are, that's simply hogwash from my point of view. The projected tax gap disproportionately consists of pass-through businesses and sole proprietorships, which invariably puts a target on the back of small businesses. The IRS has said the $400,000 threshold will be based on what they call total positive income. Now, that's an extremely broad definition of income that will capture many unsuspecting small businesses. Plus, a recent Treasury Inspector General report found that IRS lacks a uniform definition of a high-income taxpayer, and IRS also has no plans to make such a definition. And the threshold isn't adjusted for inflation, so more and more taxpayers will get caught up in this more will get caught up every year. Now, this reminds me of the debate going back to the alternative minimum tax that was set up in the 1960s. It wasn't indexed. It was supposed to hit a few million or a few hundred taxpayers that weren't paying enough tax. So let's get a little bit of them through the alternative minimum tax. It wasn't indexed, and finally it covered millions and millions of middle-income taxpayers. Yet the revenues Democrats are counting on may not even pan out. Even CBO notes in a fine print of their estimates that there's great uncertainty. In a letter to House Republicans last year, CBO says that it estimates the IRS will, quote, use all available productive approaches to increase revenues and raise voluntary compliance from taxpayers with all amounts of income. In other words, people under $400,000 a year income, end of quote. This is a huge assumption, given scandals we read day to day. So you read less than a month ago, an IRS contractor pleaded guilty to stealing the tax information of thousands of taxpayers and even President Trump. The IRS doesn't deserve the presumption it's going to do the right thing all the time. Instead of throwing billions of dollars at the IRS enforcement, our constituent service would much better be served by a customer service focus. I have a great deal of confidence in a position called taxpayer's advocate within the IRS. So we have the recent one and one just retired from that position, Aaron Collins and Nina Olson, who previously held, Nina Olson previously held that role, have said customer service should be focused on more than enforcement, and that the best way to close the tax gap is to help taxpayers do the right thing. That reminds me of the 1998 IRS Reform Commission that I was able to be a member of, and they said, just give the taxpayers the information that they need when they ask a question, answer the phone with a real person, and give them the right answer. That's the best way to get the taxpayers to pay the right amount of money. The IRA also doesn't include the sort of robust oversight and deliberations that was part of earlier attempts to reform the IRS. To accomplish this sort of oversight, we should enact the IRS Funding Accountability Act, which I've led with Senator Thune. This legislation would put a pause on new enforcement funding until the IRS provides detailed plans for how that $80 billion is going to be spent. Right now, none of us know how these dollars are being spent by the IRS. Congress would then have the opportunity to review IRS's spending plans and reject them if not up to snuff. We all want tax cheats to be held accountable. However, we must first help the majority of taxpayers who want to do the right thing. Let's resist the siren call of magic money machine and put taxpayer services first. That's the way to get the tax money coming in. Let's return to bipartisanship we had a little over 4 years ago. Thank you, Mr. Chairman.
Thank you, Ranking Member Grassley. Let me turn now to our witnesses. First, let me welcome Dr. Natasha Sarin, who is an associate professor of law at Yale Law School with a secondary appointment at the Yale School of Management in the finance department. She previously served as Deputy Assistant Secretary for Economic Policy and later as a counselor to Treasury Secretary Janet Yellen at the United States Treasury Department. After her, we will hear Dr. Nathaniel Hendren, who is professor of economics at MIT. He is a founder and co-director of Policy Impacts, an organization dedicated to evidence-based policymaking. He is also a founder and co-director of Opportunity Insights, which is dedicated to identifying barriers to economic opportunity and alleviating poverty. Last, we are joined by Chris Edwards, who occupies the Kiltz Chair in Fiscal Studies at the Cato Institute. Previously, he was an economist on the Congressional Joint Economic Committee and tax manager at PwC. Dr. Sarin, please proceed and welcome.
Chairman Whitehouse, Ranking Member Grassley, members of the committee, thank you for inviting me to share my views on the importance of adequately funding the Internal Revenue Service. Before the Inflation Reduction Act's historic investment in the IRS, the agency could not afford to serve taxpayers and hadn't modernized tax processing in the last half-century. Returns were literally transcribed by hand. It's been remarkable to see what a difference just a year makes. The IRS achieved an 87% level of service last year. The IRS served 100,000 more taxpayers in person, and it is gearing up to pilot a direct e-file program to save taxpayers the hundreds of dollars each year they spend on tax preparation. Alongside its service investments, the IRS is prioritizing high-end enforcement efforts, and in my testimony today, I would like to make 4 points about the importance of this work. First, adequately funding the IRS is critical to our fiscal sustainability. The IRS's most recent tax gap estimates suggest that more than $600 billion in owed taxes are uncollected each year. It is difficult to appreciate how significant a loss to the fisc that represents, so some comparisons may be helpful. 1 year's worth of uncollected taxes totals nearly 3% of GDP. 1 year's worth of uncollected taxes would have covered an extension of the expanded child tax credit, lifting millions of children out of poverty through 2025. 1 year's worth of uncollected taxes would shrink our annual budget deficits by nearly half. Second, adequately funding the IRS is critical to creating a fairer economy. My past work has shown that the top 1% is responsible for around 30% of the tax gap. That's more than $2 trillion over 10 years. And yet, as the IRS was gutted in the last decade or so, its capacity to pursue this high-end evasion diminished most. Audit rates of individuals making $10 million or more annually declined by 80%. Over just a few years, more than 1 million high-income evaders failed to file returns at all, and in doing so cost the fisc $66 billion. The IRA investments are focused on reversing these trends, and they are already succeeding. In the last 9 months, the IRS collected hundreds of millions of dollars in back taxes from millionaires. And the agency has already logged progress with respect to large corporate evasion. To take one important example, the IRS recently concluded that Microsoft owes nearly $30 billion in back taxes. Historically, these types of cases against large, highly profitable corporations have been few and far between because of the resources and time that they require. Thanks to the IRA, the scales have finally been tilted some in the IRS's favor. Third, rescissions of IRA funds will add meaningfully to the deficit because they will limit the agency's capacity to pursue this high-end evasion. Former Assistant Secretary for Tax Policy Mark Mazur and I recently estimated that this summer's agreement to rescind more than $20 billion of new IRA funding will increase deficits by around $300 billion over the course of the next decade. And an additional $14 billion rescission, as was proposed last week, would add well over $100 billion to the deficit. More broadly, the idea of defunding the IRS as a pay-for or an offset is fundamentally backwards. We can debate magnitudes, but we cannot debate the following fact. Adequately funding the tax administrator is a deficit-reducing measure that pays for itself many times over. Fourth, clawing back IRA funds or lowering the IRS's discretionary appropriations will also harm the American people by decreasing the service that they receive. Taxpayer service and compliance are flip sides of the same coin. Answering taxpayer questions and helping to resolve compliance issues early in the filing process, well before an audit, are critical components to providing better service to taxpayers. These improvements also mean that voluntary compliance will rise, and so the tax gap will shrink. Through its recent investments in the IRS, Congress has meaningfully improved our fiscal future and the functioning of our tax system. Rather than be depleted, these investments should be preserved and supplemented. That requires maintaining and growing IRS discretionary funding, and in the coming years, reversing recent cuts to its mandatory funding. The American people are already benefiting from the agency's monumental progress. Adequate funding will ensure that they continue to benefit in the future. Thank you.
Thank you very much, Dr. Sarin. We'll now hear from Dr. Hendren.
Thank you. So thank you for the opportunity to speak with you all today. My name is Nathan Hendren. I'm the co-founder of Policy Impacts, an organization based at MIT that seeks to improve the quality of government decision-making using high-quality evidence on both the costs and the benefits of potential policy changes. I sit here not with the goal of advocating for any particular policy, but sharing what I believe to be the best evidence of the costs and the benefits of those policies. In June of this year, our research team, which includes Will Bonning, Ellen Stewart, and Ben Sprung-Kaiser, released a comprehensive analysis of the returns to IRS audits of taxpayers across the income distribution. We studied the costs of conducting each in-person audit in the United States and the revenues associated with those audits for the universe of IRS audits going back to 2010. For each audit, we produced a comprehensive measure of the costs of that audit from internal IRS accounting information, as well as detailed activity logs, which record the enforcement activities of all IRS auditors. These costs include all stages of the audit, including the initial exams, any subsequent appeals, and collection stages of the audit. And they include not just the direct costs of the audit and the auditor's time, but a comprehensive accounting of all non-labor costs, including the management costs, training, computing, travel, building rent, etc. Now, in addition to costs, we also estimate a comprehensive measure of the revenues generated from each audit. And this includes both the upfront revenue generated from that audit and also the effects of the audit on future tax revenue paid by audited individuals, i.e. the future deterrence effects of those audits. Ultimately, our paper estimates that marginal expenditures on in-person audits directed towards top-earning taxpayers, so those above the 90th percentile of the income distribution, are likely to return at least $12 in revenue for each $1 of costs. In contrast, audits of individuals with below median income deliver around $5 for each $1 in costs. Importantly, a large portion of this increased revenue comes through the impact that audits have on future taxpayer behavior. For every $1 that the IRS collects in initial upfront revenue, there's an additional $3 in revenue that comes in the future from the changes in that taxpayer's behavior, likely because they learn during the audit about their actual tax liabilities. Our work also studies whether expanded enforcement activities would face diminishing returns. We do this by analyzing the large decline in audit rates between 2010 and 2014 tax years. We show that when the IRS heavily cut back on audits, the rate of return on IRS expenditures did not change. And so while ramping up IRS enforcement back to 2010 levels might include additional upfront costs, such as training new auditors, our results suggest that if the IRS expands its audit rates back to the 2010 levels, we would expect roughly the same rate of return on IRS audits and broadly in line with our estimates. I should note our estimates are larger than what has been estimated in previous literature and the estimates that led to the CBO scoring of the expanded IRS enforcement in the Inflation Reduction Act. The CBO has suggested that expanded IRS enforcement in the IRA would deliver roughly $180 billion in revenue off of $46 billion in enforcement costs for a ratio of about 3.9. Our results suggest that the true return on this spending could be as much as 3 times higher. The primary difference in our estimates is that the CBO has been reluctant to include estimates of deterrence effects in their forecasts, noting that the magnitude of these effects is highly uncertain. We believe that our estimates address this uncertainty and show that across a broad range of years and types of taxpayers, roughly 3 times more revenue is collected from a taxpayer after the upfront revenue that they pay during their audit. Applying our estimates to the IRA suggests net revenues closer to the $500 billion range. We also consider the implications of our results for the efficiency of raising revenue through audits. The high return per dollar spent suggests that the deadweight loss associated with expanded enforcement activities is relatively low relative to the revenue that is raised. This suggests that in addition to the equity concerns of ensuring compliance with the tax code, increasing audit enforcement is a relatively efficient way of raising revenue. And so to sum up, our analysis shows much greater returns to IRS audits than previously estimated, particularly for the highest earners, and we found no evidence that marginal returns would be diminished if the IRS expanded enforcement back to the 2010 levels. Thank you.
Dr. Hendren, thank you very much. Mr. Edwards, over to you.
Thank you very much. Thank you for inviting me to testify. Huge debt and rising interest rates are generating a federal budget crisis. All new spending should be offset by cuts, in my view. However, reducing the president's increased IRS enforcement doesn't work as an offset because enforcement may modestly increase revenue. So I agree with the chairman about that. That said, I support rescinding the increased IRS enforcement because there are much better ways to boost tax compliance, including improving IRS customer service and simplifying the tax code. President Biden's budget would triple IRS enforcement spending by 2033. I think that's great overkill. The National Taxpayer Advocate said in April that IRS funding is, quote, disproportionately allocated for enforcement activities. Congress should reallocate IRS funding to achieve a better balance with taxpayer service needs and IT modernization. Similarly, the recent IRS strategic plan heavily stressed customer service and technology upgrades. Those two reforms would be win-win for taxpayers and the government. By contrast, enforcement is always a win-lose because enforcement creates collateral damage. That is, higher compliance costs and more headaches for law-abiding taxpayers. And that's because the IRS makes a lot of mistakes. Consider disputes that end up in federal tax court. In recent years, the IRS only received 48% of the dollars that it claimed in court. It was only right half of the time. Similarly, more than 40% of IRS audits of partnerships result in no recommended changes. And for individuals at the top end above $5 million, almost 40% of audits result in no change. Those are really high shares of targeted taxpayers who did nothing wrong, so that's collateral damage. The IRS needs to enforce, but we have to remember that enforcement does impose higher costs on families and businesses who paid the correct amount. So enforcement is a blunt and inaccurate tool. In October, the IRS released a new estimate of the tax gap. The gross gap for 2021 is $688 billion. That's 2.9% of GDP. Well, that estimate of the tax gap is actually similar as a percent of GDP as previous estimates going back at least 2 decades. So the official tax gap shows that taxpayer errors and cheating have not increased as a share of the economy. A number of studies have compared tax gaps across countries. They show that the U.S. tax gap is about the same size or smaller as tax gaps that are typical in Europe. I think that the data show that Americans are relatively law-abiding on their taxes. That said, there are 3 better ways to boost tax compliance than jacking up enforcement. First, keep tax rates low. Let's look at corporate taxes. The average statutory corporate tax rate has remarkably dropped in half since the 1980s, around 48% to 24% across the OECD countries. But while the rate has gone down, corporate tax revenues across the OECD as a share of GDP have actually risen, which is remarkable. With lower rates, there's less incentive to avoid and evade. Second, we have to improve IRS customer services. The National Taxpayer Advocate said, quote, "The most efficient way to improve compliance is by encouraging and helping taxpayers do the right thing on the front end. That is much cheaper and more effective than trying to audit our way out of the tax gap," unquote. Third, Congress should simplify the tax code. Rising complexity invites abuse and makes IRS administration much more difficult. The GAO took a look at IRS enforcement in a detailed study last year, and they found that for all returns over $200,000, the average IRS audit hours per return has doubled, which is a remarkable statistic. The code has become so complex that agents are spending twice as many hours auditing each return. All the complex energy tax breaks in the IRA legislation will encourage abuse, and it will cost IRS billions of dollars to administer. The projected cost of the IRA energy breaks has ballooned from $390 billion to around $1 trillion by various estimates. So a good offset for any new spending, in my view, would be to cut these huge subsidies. So in sum, IRS data, in my view, show that the tax gap is stable as a percent of GDP. The U.S. tax gap is no higher than countries in Europe. I would say something about, it's true that the top 1% are the source of 30% of the cheating or error. That is true. The GAO data supports that. But the top 1% pay 42% of all income taxes, so it's not surprising. We can reduce the tax gap by cutting tax rates, improving IRS customer service, and simplifying the tax code. Thanks very much.
Thanks. I think, Mr. Edwards, you said at the beginning of your testimony that the House IRS enforcement cuts won't help reduce the deficit, and I think all 3 witnesses agree on that. Can I just see if we're agreed? Did I paraphrase you correctly?
That's right. That's what the CBO shows.
So all 3 agree there. Dr. Sarin, let's talk about customer service first. You say that an 87% level of service took place this past filing season, up from an 18% level of service in 2022. What do you mean by level of service?
So that's a statistic about the level of telephone service, so the number of phone calls that get answered. And just for some context, in the 2 years leading up to the Inflation Reduction Act, over 500 million calls were placed to the IRS, and only 13% of those calls were ever answered. and compare that to the progress with just 1 year of Inflation Reduction Act funding, where now only 13% of calls are unanswered, and I suspect that number will go down in the future.
And the wait time dropped.
The wait times dropped by
commensurately.
85%, and they now average 4 minutes.
So let's talk now about the tax gap, which the IRS says is $688 billion, which is a pretty big number. But they also concede that that $688 billion tax gap is an underestimate of what the real tax loss is. What are the tax evasion devices that are not contemplated in the $688 billion that make it a bigger number in reality than that?
So the challenge really from the IRS's perspective, which as you point out, Chairman Whitehouse, they acknowledge every time they measure the tax gap, is you can really only measure what you can see. And from the agency's perspective, they do a pretty good job of measuring the individual income tax gap, but they have no real capacity to measure the corporate income tax gap, the partnership tax gap, the digital assets tax gap, and that's why former Commissioner Rettig speculated that the tax gap could be as high as $1 trillion a year. That's a number that Larry Summers has actually pointed to as well. The challenge from the IRS's perspective, and part of why these resources are so critically important, is they're going to enable the IRS to capture those types and measure those types of evasion that are happening disproportionately at the very top of the distribution through things like partnerships or through things like offshore bank accounts that today the agency just isn't able to see. And there's an academic estimate by Gabriel Zuckman and Daniel Reck and some co-authors at the IRS that suggests that the tax gap is undermeasured by around 10%, and that the distribution of the tax gap is more heavily concentrated towards the top 1%, who are actually responsible for closer to 40% of the tax gap when you take into account these underestimates.
Let's take a look at the diagram that I put up earlier that shows, as I understand it, this is an actual diagram of a complex partnership, anonymized, we don't know which one it is, that the IRS provided to the GAO as an illustration of the kind of complexity that is deployed by very wealthy individuals in order to avoid taxes. This is, as I understand it, an outline of a single entity.
A single partnership, that's
with
what it looks
multiple, every little dot is a separate corporate entity that can provide its own taxes.
That's exactly right. And just for
So
what it's
how
worth,
might a tangle of shell companies like this facilitate tax evasion? And is there real concern that auditing something like this will create more headaches for the people who put so many headaches and so much money into crafting a scheme like this?
So I think there's a lot of pieces here that are really important to unpack, Chairman Whitehouse, and thank you for raising them. Pass-throughs are taxed not at the entity level, but at the individual level. So from the IRS's perspective, what they have to do with a complex partnership like this is peel it back like an onion. You have partnerships who own partnerships who are owned by foreign entities who then somewhere down the line are somehow there is individual income tax liability that sits in a structure like that. And for the past decade or so, what you've had when you had a structure like that and the IRS initiated an audit was you had something like a single revenue agent at the IRS trying to figure out what was going on there. And actually, this is a point that's important to raise with respect to what Mr. Edwards just said about no change rates for large complex partnerships. The no change rates, and GAO pointed this out in their report as well, are a result of the fact that all the compliance issues that are posed by a structure like this, the fact that partnerships are able to shift income and gains and losses throughout partners in ways that hide income from the IRS and ultimately evade their tax liability are just incredibly difficult to unpack without the right team of experts spending time on this type of work.
And quickly, Mr. Hendren, because my time has expired, your point is that once you've correctly audited a massive scheme like this, the revenue correction that comes will persist through time, not just in the tax year, and that we should do a better job of counting the future revenues that come once an entity like this is audited. It's not going to go back and file the same thing once it's been caught, correct?
Yeah, that's right. So what we see is that when you audit an individual, a small business owner, that you roughly pick up $3 additional relative to the initial dollar that you pick up.
And something like this could be a multiple of that.
That would be one way in which a business owner, or in an extreme way, a business owner would be evading taxes. That's right.
Senator Grassley, over to you.
Mr. Edwards, let's go to that $80 billion in inflation reduction. The proponents of this funding tout this funding as necessary to increase taxpayer services. That being the case, only $3 2/10 billion of that funding was dedicated to taxpayer support. Would the lopsided nature of the IRS funding create a taxpayer service funding cliff with customer service money running dry before enforcement funding?
Yeah, that's a very good question. In fact, if you look at President Biden's budget from earlier this year that includes the IRA money as well as the discretionary IRS budget, they've got taxpayer services and technology upgrades sort of increasing for a year or two and then dropping, which makes absolutely no sense. I mean, on technology upgrades, I think we all favor, major IRS technology upgrades. There's obviously going to be an increased demand in the future for those upgrades. So I think there ought to be there should be a bipartisan compromise here to at least move the IRS extra enforcement money back to customer service and IT upgrades. Again, I think that's a win-win, whereas enforcement is always a win-lose for the economy, it seems to me.
I've heard liberal pundits claim that anyone who's not a tax cheat has nothing to worry about from increased IRS enforcement. Mr. Edwards, this is, they say even if an audit results in no additional tax due, a taxpayer can spend countless hours, incur significant costs, and experience what you refer to as collateral damage in an audit that finds no wrongdoing. Can you discuss the cost and burden an IRS audit imposes on even innocent taxpayers?
The way I look at IRS auditing and enforcement is that it's a leaky budget. It's not just, you don't just hire more IRS agents and get a big return for the government. There's many misses, as we discussed. There's many returns where there's no change. So you've subjected businesses to massive headaches and extra time hiring accountants, and there's no change. The IRS loses half the time in tax court, and even when, there's a study I cite in my testimony that IRS auditing, actually, there's an interesting study where they causes more businesses to go bankrupt after they are audited, and some of those, businesses are cheating for sure, but there is this collateral damage. There's negative, as an economist would say, deadweight loss to the economy from the increased enforcement.
Let's look at this tax gap, Mr. Edwards, of $625 billion. We've heard from some who believe the tax gap is substantially greater and that the IRS estimates are below the true number. However, there are reasons to believe that the IRS tax gap estimate may be overstated. Even though IRS loses nearly half the time at tax court, as you just said, the IRS's methodology for measuring the tax gap includes upward adjustments that are recommended by frontline examiners but reversed by administrative appeal or judicial review. Doesn't this suggest that the tax gap, which Democrats have used to justify increased enforcement, may be overstated?
I think that's right. I think that I've read Professor Sarin's work. It's excellent. It's very interesting. But the IRS just came out with their new tax gap report last month, and it says our tax gap is about the same as it's been for decades as a share of GDP. I think the IRS uses a very good methodology. They start with something called the National Research Program, which is this broad measure of random auditing, and then they take the unreported income there and they multiply by 3 to get a picture of the universe of the errors and cheating. And I think that's a pretty good methodology. And I think the IRS tax gap measure is pretty good.
Let's look at what you call the leaky bucket. According to 2022 GAO report, in 21, all audits on individuals with incomes of over $200,000 and above led only to recommended additional tax of around $2 2/10 billion. If this in the same report, CBO says they found quote, found that the IRS collected about 47% of all recommended additional taxes from individual tax audits, end of quote. Based on this, does it seem plausible that the IRS will be able to collect an additional $180 billion, $440 billion, or even $1 trillion in additional revenue from high-income taxpayers?
I think you referred to the GAO report that came out in 2022 that looked at IRS auditing. I think it's an excellent report that your staff and the members should take a look at. In 2021, the IRS audits, they recommended just $2 billion on all the audits above $400,000. So even if you say quadrupled IRS auditing at the top end, maybe the IRS would gain another $10 billion or so, maybe $20 billion. But, you know, the deficit now is $2 trillion. So you could quadruple the IRS auditing. That would, you'd reduce the deficit by maybe 1%. So, you know, enforcement, like I said, it's a leaky bucket. It's not an automatic sort of money machine. I think there's better ways to increase compliance.
Let me turn now to a colleague who has been an ardent voice, not only for a fairer tax code, but for fairer tax enforcement. That is Senator Van Hollen, who will be followed by Senator Romney.
Thank you, Mr. Chairman. Thank all of you for your testimony today. I just want to make sure I understood an answer you all gave to Senator Whitehouse earlier, which is you all agree that better tax enforcement will reduce the deficit. Just a yes or no, if you could.
Absolutely.
Yes.
Slightly, yes.
Slightly yes. So I want to raise this issue in the context of a current debate because the House of Representatives just passed legislation to provide assistance to Israel, which I support. And they said they were going to offset that $14 billion cost by cutting $14 billion from the IRS. Now, all of you would agree, would you not, that that would increase, not decrease, the deficit?
It's correct, and that's also CBO's conclusion.
Yes.
Slightly yes, but again, I think the problem is the collateral damage on the private.
Yeah, slightly yes, and yes, and yes. And in fact, you know, we mentioned the IRS figures earlier. Mr. Edwards and said you thought they had good figures. I don't know if you agree with this, but they found that actually that $14 billion cut would lose $90 billion to the taxpayer. As Dr. Sarin pointed out, even CBO says it's in the range of, I think they said, $14 billion. But the bottom line is this. No matter how you cut it, it is misleading at best and dishonest at worst, is it not, to claim that that is covering the $14 billion costs in the House bill?
That is correct.
Going all the way across, yeah, I think it's going to cost more than $100 billion.
Yeah, I think they ought to offset the Israel spending with other spending cuts.
Right. I mean, so that's another way of saying it just doesn't compute, right? And so what we're seeing here is a game by House Republicans, even acknowledged by Congressman David Schweitzer from Arizona, who, and I'm going to quote him saying, I think it was intellectually lazy. I care about the debt, he went on to say, and at the same time move something as your pay for that actually will have a multiplier of raising the debt, end quote. Clearly that's misleading. And I just find these budget games that are played by too many people around here to really undermine the argument around the budget issues. Let me ask you, Dr. Hendren, sorry, if you could, and I know you've spoken to this in your testimony, just quantify what you think the current tax gap is and the extent to which by targeting very wealthy taxpayers who are not paying the taxes already due and owing can help reduce the deficit.
Sure. So as Natasha was saying as well, it's very difficult to measure what you don't see. And so the IRS faces an enormous difficulty when they try to measure the tax gap. Our work took a different approach, which is to start with the actual audits that have taken place over the past decade in the United States and study how much revenue you actually get from those audits, both the upfront revenue that you get and the future deterrence revenue that you get from those audited individuals over time. That suggests to us that for every dollar that you spend in the audit, you get back about $12 over the long run.
And and that's by targeting primarily on wealthy taxpayers?
That statistic is focused on those in the top 10% of the income distribution, and as Senator Whitehouse was referring to, we do find higher estimates as you go up into the top regions, very top of the income distribution.
Right. Dr. Sarin, do you agree with that analysis?
Entirely, and in fact, Dr. Hendren's work is a good sort of illustration of the potential of what the IRS is actually doing today, because they've committed not to using these new dollars on anyone under $400,000. All of their enforcement work is concentrated on the high end, which, as Dr. Hendren speaks to, has a return of at least 12 to 1 and maybe more than that.
Well, thank you for that. And it does constantly amaze me how some of our colleagues are opposed to trying to collect taxes that are already due and owing. We're not talking here about increasing the tax rates. We're talking about collecting monies already legally due and owing. And our colleagues want to handcuff the IRS and prevent them from collecting those monies from very wealthy taxpayers. And that obviously increases the deficit when you deny the IRS those funds, something you've all agreed is true. Thank you, Mr. Chairman.
Thanks, Senator Van Hollen. Senator Romney.
I agree with much of what Senator Van Hollen has just described. I come away feeling that there's ought to be a pox in both our houses, both Republican and Democrat houses. There's a quote I love by, I think it's H.L. Mencken, who said, to every complex problem, there's an answer that's simple, clear, and wrong. And the idea that somehow we should reduce the number of audits and the number of IRS agents, and that's going to make us more money, is simple, clear, and wrong. It's a demagogue approach, which is, I think, designed to say, hey, we want to get people to vote for us because we're going to promise them they can cheat in their taxes because there won't be any audits. I mean, it's just disingenuous. At the same time, I'd note, I saw the chairman's chart with all these lines of all this complexity. I can assure you, as someone who's been involved in an entity that probably looked similar to that, that's not designed to save taxes or to cheat on taxes. It's just the reality of what happens if you are making multiple investments. Let's presume, for instance, you're an entity that buys houses. You buy homes, and you're going to rent them to people and then ultimately sell them. And you bought 1,000 homes. Each home would represent a different line on that chart. They're purchased at different prices. Perhaps different investors joined you to buy different ones of those homes. Maybe there was a foreign investor involved. Maybe there was a not-for-profit involved. So each of them has to get their own, if you will, tax form with what the income is, what the expenses are, what the taxes are. That's the complication of investments made by entities that are making lots of different investments in lots of different places. Now, I recognize as well that a lot of those machinations that go on in the corporate world in particular are done to minimize taxes, but to do so in conformity with the laws we have written. It's not that they're trying to cheat, it's that they're trying to follow every possible avenue to keep their taxes as low as possible. So I'm one of those who believes very deeply in carrying out audits, hiring enough IRS agents that we're actually getting as much revenue back as we possibly can. I would also strongly believe that putting in place systems makes a lot of sense. I would note that with regards to your research, being able to have people call the IRS makes a lot of sense, although the calls are overwhelmingly going to be people of modest income. People of high income, I mean, I remember when I was a student, I was calling the IRS to get advice on a number of things, but as I became far more financially well off, I talked to the accounting firm that I worked with, PricewaterhouseCoopers, and they were the ones that were doing these kinds of machinations. I did not make any more calls to the IRS because my questions were too complex for someone that would be answering the phone at the IRS to likely have an answer. I guess I'm going to turn to a different thing, because in my opinion, I agree with all of you here, which is we ought to have more people doing audits, and that's going to generate more money for the federal government. And I think it's nuts to somehow think that getting rid of auditors is going to save us money. Getting rid of auditors is going to cost us money. We ought to have enough auditors to get as much revenue and compliance as makes economic sense. I don't know what the right number is. I'm not sure I'd start off with 80 billion, but I'd start off with more auditors and see how it goes. Let me turn to a different topic entirely, and that is, we understand that raising taxes on people slows growth of our economy. And so there's a trade-off, but we also see we got a $1.7 trillion deficit. And so are there places where you look at the tax code and say, you know what, this is a place where we could generate more money and not slow growth? Are there places and I'll turn to the representative from the Cato Institute, are there things we could do to generate more tax revenue? And by the way, I don't go with the idea of if we just cut revenue more, or cut taxes more, we'll get more revenue. Because taking taxes to zero is not going to get us more revenue. So there's a point at which you don't keep cutting and get more revenue. But are there places that we should be looking to get additional revenue in our tax code?
Yeah, absolutely. I mean, I mentioned in my testimony, in my written testimony, that the energy tax cuts or breaks in the IRA legislation originally scored a $390 billion. Now that it looks like they're going to cost $1 trillion. I think there ought to be a compromise there to at least cut those breaks back to what the original score was. I've proposed over the years that we ought to cut back on the municipal bond interest tax exemption. It's an exemption that mainly goes to the very high end, as you may know, Senator Romney, and I think it distorts investment. So I think that there's lots of loopholes that go to the high end that I would favor cutting back or eliminating that would raise revenue and would be good for the economy.
Mr. Hendren, do you have anything you want to add in that regard?
No, I mean, I'm sure that there's a lot of different areas where one can find more efficient policies than the current ones that are in place. I would just kind of reiterate that audits are especially an efficient source of revenue relative to even tax rates at this point.
Thank you, Mr. Chairman.
Thank you very much, Senator Romney. Next is Senator Johnson.
Thank you, Mr. Chairman. Let me start at the outset. I'm an accountant. I value audits. My wife was an IRS auditor, so we need that. There's no doubt about it. Okay, you can argue legitimately, to what extent, how many auditors, how much we should spend on it. That's legitimate conversation. I do have to admit, though, every time I hear the chairman or the chairman of the Finance Committee say the word wealthy tax cheat, I think of the name Hunter Biden and all of the Biden family members who have been participating in his influence peddling grifts. I think it's interesting, as much as this hearing is emphasizing on audits, that when Senator Grassley and I were conducting our very legitimate investigation using our constitutional responsibility of oversight, when we were investigating tax cheating, influence peddling, money coming in, tens of millions of dollars from foreign entities to impact potentially U.S. policy, Democrat senators, our ranking members, not only frustrated, I would say obstructed our investigation by falsely claiming we were soliciting and disseminating Russian disinformation. Now, that just happened to parrot what we've now found out. The FBI set up their Foreign Influence Task Force, what they were doing in their catch and kill operation, find derogatory information that was being developed by 40 confidential human sources, and then go kill it. Go say, no, don't look into that. Don't go down that investigatory hole, because that's Russian disinformation. So the question I have based on that, Professor Sarin, it's obvious we have a dual system of justice applied to tax compliance. When somebody is connected politically as Hunter Biden, when his investigatory team allows the statute of limitations to expire on the most serious tax evasion charges, what does that dual system of justice, what does that do in terms of taxpayer compliance?
So, Senator Johnson, I actually want to take a step even higher, but with your sort of theme of democracy and heart. In this country today, we have a two-tiered tax system, as you acknowledge. Your constituents who are wage earners are already paying everything that they owe, And a very small proportion of very wealthy individuals and large corporations have the opportunity to
Okay, and that was your
liability.
testimony. Again, I want you to speak to the fact that the president's son is largely skating because they allowed the statute of limitations to run. What does that do to compliance in terms of Americans' attitude toward that, Professor Hendren? I've got other things I need to get to here.
I have very little to say on Hunter Biden. It's a very small portion of the tax gap.
That is true, but it's a very large portion in terms of Americans' attitude toward our dual system of justice.
So
Mr. Edwards, what do you think that does in terms of the public opinion of complying with taxes when one wealthy, connected individual basically avoids prosecution?
I agree, and it shows a general problem. There's a huge IRS management problem. We ought to fix IRS management before anything else. The IRS, lost or destroyed 30 million tax returns in Ogden, Utah. They don't have a good explanation for that. The huge theft of thousands of high-end tax returns a couple years ago. There's a big management
politically motivated theft and then distribution to ProPublica. Okay, that's politically motivated. I want to turn to the solution here. Again, I'm all for auditing. We're always going to need it. The solution is simplifying and rationalizing our tax code. I developed this chart years ago. I think it's quite interesting. This goes back to 1959 and shows the top marginal tax rate. To what extent were we going to punish success, and then the extent to which we were successful at punishing success. It's remarkable. Over 60-some years, we've had as top tax rate as high as 91%, 70%, 50%, 28, 31, 39.6, 35. Now we're at 37%. But over that over 60-year time period, the average percent of GDP that we've raised in revenue is 17.3%. It doesn't change much because our tax code is so complex and as a result so difficult to comply with. It is notable that even after the tax cuts from 2018, the last 3 years has been above that average, 17.9, 19.6%. Last year was 18.2%. So increasing tax rates is not going to work. I would say dramatically, and I mean dramatically simplifying, but also use the term rationalizing. Our tax code is completely irrational. We have different forms of tax rates on different kinds of incomes. I mean, income ought to be income. From my standpoint, it ought to be based on cash generation. There's so many ways of simplifying this, and right there, you would dramatically increase compliance because, again, if tax rates are kept low, it's easy to comply with. There's the solution. Let's quit talking about sending more agents to harass Americans, and let's talk about the real solution, which is simplification and rationalization. Would any of you like to comment on that?
I would just like to comment. Professor Sarin's chart that was put up by the chairman is a fascinating chart. I would differ from Senator Romney in that it's true that modern businesses got complex. A lot of what drives that chart, frankly, is corporations making extremely sophisticated structures to avoid tax. They don't try to do things that are illegal. It's just that the tax code is so gray, they push the limits, and that's what I experienced at 5 years of PwC. That's what they try to do, push to the limit of a very gray code.
Senator Merkley. Senator Merkley's time we're in Senator Merkley's time now.
Thank you, Mr. Chairman. Is it correct that the IRS estimates that it collected $688 billion less by the tax filing deadline than taxpayers legally owed in tax year 2021? And I think Dr. Sarin or Dr. Hendren?
That's correct.
That's correct numbers. No, I'm the son of a mechanic, and my father always said, I sure am glad that I get to pay taxes, because there's been times in life when I didn't earn enough money to owe any. And he was very proud of contributing to the national effort, participating in the services our nation provides, be it law and order, the court system, the transportation system, fundamental humanitarian services to support families' success and so forth. I just heard the allegation that collecting taxes do is punishing success. Is it punishment of success to enforce the tax code?
Absolutely not, Senator Merkley. And I'll just say that outside of the IRS building, there's a quote from Oliver Wendell Holmes that say that taxes are the price we pay for a civilized society. And I feel very deeply with your father's sentiment. And I think that's frankly what the American people feel as well.
Well, I certainly believe that it undermines that sense of fairness and participation if the best off among us have full permission to cheat and not pay their share. Do you agree with that?
Absolutely, very much so. And in fact, ordinary Americans are automatically paying all that they owe. Their taxes are withheld. It's just those at the top of the distribution who earn income in opaque ways that have the opportunity to evade.
So, colleagues across the aisle have proposed not enforcing the tax code with the richest Americans. They want to let them cheat. Is that good for America?
I guess I get to take it. You know, I think it's a very inefficient thing to do. Our work suggests that we can get back, as I said before, $12 for every dollar that we put in to IRS enforcement, and that makes it even a more efficient way of raising revenue relative to other sources of like tax rates.
And Senator Merkley, as you point out, it's not just a matter of revenue raising, though it is 3% of GDP that we're losing each year in uncollected taxes, but it's also this matter of like fundamental fairness, that the laws should apply. I believe, I'm a law professor, I believe very strongly in the rule of law. The laws should apply across the income distribution, and it shouldn't be that the wealthy and large profitable corporations have at their disposal tools to evade that the rest of the American people do not.
So that 3% of GDP that should be collected under the rules means we have to borrow that additional amount. Is borrowing more in order to let the wealthiest off the hook good for America?
It's not, and neither, frankly, is raising taxes that are only going to be borne by the share of taxpayers that are complying with their tax obligations. So as we think about how to deal with our growing deficits and our debt problem, it strikes me that the lowest hanging fruit has to be collecting the taxes that are already owed by taxpayers who today are at the top of the distribution, are doing the best, and just aren't paying their fair share.
Well, I must say, and I live in a blue-collar community, and I think the sentiment would be universal that while we're paying our fair share, the wealthy need to pay their fair share too. And because it's not collected in advance, and that's kind of a privilege of the type of income they're earning, that in fact they need to know that they'll be held accountable. So there's an incentive to be honest up front. Unfortunately, it takes an incentive for many individuals in America who see this not as the honor of doing their share as a citizen, but see it as a game to be played to cheat the system as much as possible. And I was struck when I first went to college and started hearing fairly affluent people talking about the pride they had on having developed different tax strategies to dodge, including out-of-country strategies. And that was so contrary to the vision that I believe in of everyone doing their fair share and part for this country. So thank you all for your testimony. I hope we'll see an eruption of integrity across the board and bipartisan support for the integrity of every citizen paying their fair share, and not a strategy of trying to let the richest Americans cheat, undermining the success of the entire social contract across this country. Thank you.
Thank you, Senator Merkley. We turn now to Senator Lee, who will be followed by Senator Kane.
Thanks so much, Mr. Chairman. Thanks to each of you for being here. Based on the title of today's hearing, one might think that America's wealthiest taxpayers are just robbing or constantly shortchanging the U.S. Treasury. This is exaggerated, and it's ultimately inaccurate. It's a disingenuous claim that's used as justification for pursuing a historic expansion of federal spending and a radical redistributive economic policy agenda that would make FDR and LBJ blush. Now, let's be clear. For obvious good reason, tax evasion is very much illegal under our federal tax code. It's illegal, it's wrong, and it's to be discouraged and punished whenever it's found. Many of my colleagues on the other side of the aisle frequently conflate, perhaps knowingly, perhaps not, illegal tax evasion, which has a technical meaning under the law, with legal measures that taxpayers may use legally to reduce their tax liability. There is a difference between those two things, and those things matter. And by all means, we should debate whether some of these tax expenditures, such as the SALT deduction, ought to exist and to what extent they ought to be recognized. And instead, many in today's Congress and in this administration have called for confiscatory tax policies that are either unconstitutional, such as the wealth tax, or unjustifiable and extremely complex proposals that seek to tax gains that have not yet been realized as income. Those, I would add, are almost certainly unconstitutional themselves. So when it comes to so-called tax fairness, it's definitely worth remembering. The U.S. tax code has been and continues to be undeniably very progressive. Let's look at the most recent Treasury Office of Tax Analysis estimates on the national individual tax burden. Those show us a few things. They show us, for example, that the top 1% of U.S. taxpayers earned roughly 20% of all income nationally, and while earning roughly 20% of all income nationally, paid 42% of total federal income taxes. So this group's average federal income tax rate was 22%. The bottom 50%, on the other hand, earned 14% of all income nationally and paid negative 5.5% of total federal income taxes. This group's average federal income tax rate was negative 6.3%, meaning net federal tax burdens on average are actually negative for the lower half of American taxpayers by household income. In other words, they're getting more back through refundable tax credits than what they pay in. If this isn't evidence of an overwhelmingly progressive federal tax system currently in place, I don't know what would be. I don't know how it could be more progressive than that within our system. Even if we look at the distribution of the federal tax burden in a broader way by including the payroll tax burden, the federal tax code remains overwhelmingly progressive. Another inconvenient truth that some of my colleagues like to omit while making claims of how desperately we need more tax revenue is that federal tax revenue as a percentage of GDP was 19.6% in 2022. This is unusually high. In fact, this is the second highest level in the last 60 years, and about 2 percentage points higher than the historic average during that time period, even during periods when the top marginal tax rate has been much, much higher, like well into the 70s. Ironically, this explosive growth in revenue was driven in large part from significantly higher than expected income tax collections from realized capital gains. Regrettably, spending in 2022 as a percent of GDP was still 5 percentage points higher than the historical average. Further, federal revenues have averaged 17.3% of GDP over the last 10 years, in line with the 60-year historical average of 17.4%, but federal spending has averaged 23%, way above the 60-year historical average of 20%. And that's only projected to increase, thus creating many of the problems that we've got. Mr. Edwards, in your written testimony, you mentioned that while tax enforcement is certainly a worthy goal, the $80 billion of additional mandatory funding for the IRS is excessive. Can you describe some of the reasons why this was an unnecessarily large funding boost for the IRS and perhaps some of the unintended consequences likely to result from it?
Well, let me start by saying I agree with what Senator Merkley was saying and what you're saying about fairness. We all want fairness. I just think by going to the enforcement lever first, you're putting the cart before the horse. The better way to improve tax compliance, increase fairness for everyone, is to simplify the tax code, improve IRS customer service, improve their IRS technology, and that way we'd boost tax compliance and would be good for taxpayers and the economy. Enforcement is a win-lose proposition, especially when the tax code is so complicated. It creates a lot of collateral damage on businesses and individuals who are already paying the proper amount.
Well, no, that's right. Let's see, my time's expired. It is worth noting here again, even when our top marginal rates were sky high, we still weren't departing meaningfully. We still weren't reaping more than the historical average of just under 17.5% of GDP. So that candle can only be burned so many ways. It doesn't make that big of a difference on that end and can reduce compliance and therefore ultimately reduce revenue. Thank you.
Thank you, Senator Lee. Senator Kane.
Thank you, Chairman Whitehouse, and thanks to the witnesses for being here. The title of this hearing is a colorful one, but it should be a no-brainer for all of us. You know, if people are cheating, especially cheating the federal government out of sizable tax revenues, we should have a system that enforces them and catches them, and they should pay for the reasons that Senator Merkley was describing. I'm very concerned about efforts to raid IRS funding, because what I really want with an IRS is an IRS that's responsive to Virginia constituents. And in the past, I've been in the Senate, I guess I'm in my 11th year now. I monitor my 1,000 outreaches a day, 365 days a year from constituents with concerns. I know what are the major ones, and IRS issues tend to be near the top. And the ones that are there are not the IRS is cracking down on me so much as I can't get a call return, I can't get my refund back in time. I want to be able to pay what I should, but I would like an IRS that's responsive. And I worry about efforts to raid the IRS funding as diminishing the quality of service that the IRS is able to provide to my constituents. My casework team in Virginia has helped hundreds of folks with IRS issues, and here's just a small taste of what they deal with. Multiple issues of constituents needing proof of their federal employer ID number and being unable to reach anyone at the IRS to assist. Multiple issues of constituents having a tax lien on their property and being unable to reach anyone at IRS to get a payoff amount in order to close on a real estate deal. Multiple issues of constituents submitting a tax payment with their tax return and where the IRS has either cashed the check but then failed to process the return, or where the check would be returned to the constituent who would later get a bill for late payment once the return was finally processed. Multiple issues of the IRS requesting ID verification, and constituents would either complete the process online and their return would still not be processed, or they would be unable to get an appointment to complete the process in person at a taxpayer assistance center. Over the last 11 years, my casework team has had to help straighten out these problems and many others as constituents deal with an IRS that is operating without the funding and technology necessary to effectively serve constituents. Dr. Sarin, the focus of most of the conversation around the IRA on funding has been about enforcement, but much of the funding that we passed was simply to enable the IRS to function properly and provide the level of service that American taxpayers have a right to expect. Can you talk about some of the ways that the IRA funding is already helping address the wide variety of issues that my constituents and those of my colleagues are dealing with on a regular basis when they're interacting with the IRS?
Absolutely, and Senator Kane, your sort of laundry list of challenges that you've dealt with over the years actually reflects all the ways in which the IRS is making substantial progress. Refunds are being processed faster than ever before. You're in a situation where yesterday Treasury Secretary Yellen announced that walking into the next filing season, the IRS is going to be in a position where it can process and intake information from all taxpayers digitally. And that might seem small, but it's actually monumental when you think about what it means for small business owners who no longer have to fax forms to the IRS, but instead can be in a position where they can just upload them online. It's much simpler, it's much more efficient phone calls are being answered, people are getting help with respect to making sure that they do what they want to do, which is fulfill their tax obligations accurately. And to be clear, just like you're worried about, Senator Kaine, I want to emphasize there is no way to rescind any portion of the IRA funding and preserve these service gains. Any dollar that is taken from the IRS is going to mean less good service for your constituents.
One of the things that I've noticed about the passage of the IRA, it led so quickly to improved constituent service. And again, I'm seeing that on real time just because every day we get complaints about every federal agency. And if I watch the IRS complaints coming into my office drop dramatically, I know something's going on. I know something's going on when people are getting their refunds quicker because we hear about that every day in the phone calls to our office. And so there were few aspects of the IRA that produced a constituent response so quickly as the investments that we made in the IRS, because the IRS has used those investments to dramatically improve the customer service experience. And they plan to go further. I noticed Secretary Yellen's announcement yesterday, too. And, Mr. Chair, I'd like to introduce the statement of new policy that came out from the Department of Treasury yesterday titled IRS Achieves Key Paperless Processing Initiative Goal, outlines improvements for filing season 2024, because the IRS is not done with making constituent service, and we shouldn't screw it up by rescinding dollars that we've invested in them to enable them to serve American taxpayers better. I'd love to put this into the record.
Without objection, the document will be added to the record.
And I yield back.
And we now turn to Senator Kennedy.
Thank you, Mr. Chairman, and thanks to all of our witnesses today.
Wait, listen.
Professor Sarin, you're a professor at Yale Law School?
I am.
Okay. And I see you've been pretty active on Twitter. I'm looking at one of your tweets from a few months ago, October 30th, 2023. I'd like to read it to you. The House Republican stance is, I kid you not, support for Israel as long as we make it easier for people to cheat on their taxes. End quote. Did you tweet that?
That's correct, yes.
Okay. How many Republican congressmen or women did you talk to before you made that statement?
I was reacting to the fact that, and we've talked about it actually.
Yes,
so
ma'am,
far
but
in this.
first, if you could, how many Republican congresswomen or congressmen did you talk to?
I didn't talk to them. I actually was just reacting to the legislation that was proposed.
You
and
didn't talk to
passed.
you didn't talk to any of them
No, sir.
before you said that every single one of them supports Israel only if it is made easier for people to cheat on their taxes?
I actually don't think that every single one of them believes
But
that.
that's what
I,
you
But I
said.
do think that the legislation passed by the House reflects a statement of purpose that in order to support Israel, it's
But I'm
important
looking at
to
what you said.
allow
what your
taxpayers to
students
be able
thought.
to cheat
You
on their
said
taxes.
that every single House Republican, none of whom you talked to, would only support Israel if it was made easier for Americans to cheat on their taxes. Now, you said that, and you didn't talk to any of them.
Senator Kennedy,
Didn't you?
I am struck by, and perhaps this is something on which we agree, that it is incredibly important to support Israel. It is also incredibly important to make sure that taxpayers at the top of the distribution
we agree on
pay their
Israel,
fair
but I
share.
just can't believe you would say this about members of Congress. It's pretty pejorative, vicious. Let me finish. Without talking to them. I mean, would it be possible for somebody to support a reduction to the IRS budget because they simply believe the federal government ought to have a balanced budget? Would that be a fair position?
That
Would that be a principled position?
Except that that actually doesn't work with respect to defunding
But would
the
it be a
IRS.
principled position?
it wouldn't be an accurate position because
Okay.
defunding
But you don't
the
know because you
IRS
didn't talk to anybody, did you?
Well,
You just said it.
Defunding the IRS, the CBO agrees, everyone who's testifying today agrees that that is going to add to deficits, not reduce
Could
them.
it be that a House Republican wanted to reduce the IRS's budget because they think that the IRS is a model of inefficiency and shouldn't be rewarded with more money?
Well,
Could that have been a possibility, a motivation for the way they
Senator
voted?
Kennedy, I so appreciate that question because the reality.
Could that have been
that the
a
reason-
motivation for the way they voted?
And it relates very closely to what Senator
Could
King
that have
said.
been a motivation for the way they
reason
voted?
That you've seen an inefficient
Could that have
IRS.
been a motivation
If you
for
allow the
way they
witness to
voted?
answer, you might get your answer, Senator
It
Kennedy.
frankly couldn't have been.
It
because
could or couldn't?
It could not have been.
How do you know you didn't talk to him?
Because the reason why you've seen
You
the
just
IRS
made this
that
statement that
hasn't been able.
every Republican in the House supports Israel only if it has been made easier for people to cheat on their taxes. Could it be that maybe a House member thought that, well, the more money we spend, the more deficits we have, and the more deficits we have, the more pressure is put on interest rates, and the higher interest rates go, the more it hurts the poor. Could that have been
Senator
the position
Kennedy,
of one of the House Republicans?
Senator Kennedy,
Could it have been theoretically?
couldn't have been because
Could it couldn't have
agrees.
been?
It frankly couldn't.
How do you know you didn't talk to him?
Well, I know that everyone agrees, including witnesses across the aisle, including CBO, including every single tax expert that has contemplated this question, that defunding the IRS makes deficits worse, not better. And so this is a deficit
I just find it,
measure.
Professor, appalling that you would make a statement like this, a vicious statement like this, without talking to a single person about whom you made this statement. And I'm going to remind you, you know, you can only be young once, but you can always be immature. And you ought to think about that.
Thank you, Senator.
Thank you.
Let me just say that I think that the treatment of witnesses is beginning to degrade a bit here. And I'm going to strike some commentary if it continues down this road. I think personal insults to witnesses are not appropriate, and I will not be tolerant of that in this committee.
Well, could I respond, Mr. Chairman? You're going to
Fire away. I think you just called a
You're
Yale
going to
Law
do
School
what you got to
professor
do,
immature.
but I'm going to continue to use my time. You bring witnesses as you're entitled to, and some of them are very good. Some of them have the credibility of Michael Avenatti, and I'm going to use my time when I think it's appropriate to
And I'm
test.
going to use my authority as chairman
to test
as I think
credibility,
it is appropriate
witnesses'
as well,
credibility.
in
So
order
you
to
do
keep
what you
order
got to do, and I'm going to do what I got to do.
good behavior in
But
a
if that
Senate
is meant
committee.
to bully me, you're talking
No
to
attempt
the
to
wrong
bully
guy.
you. No attempt to bully you, none at all. It's to keep the witness and the committee free of bullying.
I'm entitled to test their credibility, and I think one of our witnesses just got tested.
I hope I passed, Senator. Thank you.
You didn't.
There are other views on that. Senator Braun.
Thank you, Mr. Chairman. My questions are going to be focused on when you spend money like this bill does, what kind of return on investment are you going to get from it? The pro forma from the CBO says that we'll be spending $80 billion over 10 years, and we're going to be generating $180 billion. So you divide that net by 10 years, it's $10 billion a year. So I want to go back to the chart that I think is most important. Senator Johnson had it here earlier, is the stubbornness in our current system of regardless of what you do based upon tax rate, we end up over 63 years here generating basically the same percentage of our GDP in revenue. to me, that should be the given that we're dealing with here. And of course, we're currently running $2 trillion deficits annually. The White House has put out $42 trillion to be in debt in 5 years, 52 in 10 years. So this is a rounding error in terms of what it's going to do to save money. That, I think, is a given, and that is a very small percentage of our total problem. And then I want to talk about the trajectory of where we've come from just a short time I've been here, where we had structuralized trillion-dollar deficits annually, and now we structuralized trillion-dollar deficits every 6 months. So we've got issues that go way beyond.
Senator Braun, can I just interject for 1 second on a matter of committee business? I've got to get to the Finance Committee now. Senator Kaine has kindly agreed to close the committee. So you have your time, and my apologies for interrupting, but I wanted to let everybody know what's happening here and that Senator Kaine will be taking over the gavel for the remainder of the hearing.
Thank you, Mr. Chairman. So I'd like to hear from all the witnesses what we really do to fix the problem. This is not something that it's going to measure in any way. And even when you look at the impact from the tax cuts of 2017, that was pro-formed at $150 billion per year over 10 years, $1.5 trillion. The CPO, which I was working with them, was getting very close to showing that when you do lower rates, you put a little less into the Treasury out of the gate, but then economic growth has to be taken into consideration. So what are the ways that we actually get our budget back in order? Set this aside because it's a rounding error in terms of what it's going to do or won't do. I'd love to hear ideas on how we get our hands around something that is going to explode over the next 5 and 10 years. And this is not going to make any difference. And it's an estimation, too. There's no guarantee that we'll even get those savings. I'll start here with Mr. Edwards and then go across the panel.
So I agree with what you're saying there. I think that increasing enforcement on high-end folks, maybe you triple or quadruple the auditing, you maybe get 10 or 20 more billion a year, but that's only 1% of the federal deficit. In my view, we need large spending cuts. I suggested some spending cuts in my testimony. For entitlements, let's at least start with cutting benefits like Social Security just for the very high end. There's no reason why Bill Gates needs to get Social Security. We can't afford that anymore. And secondly, I would say that we have to revive federalism in this country. Federal government spends over $1 trillion a year subsidizing state and local governments. I mean, the ACA match for Medicaid is a 90% match. We can't afford that anymore. Let's cut back these matching payments to the states. In my view, get the federal government out of areas like K-12 education that the states are really responsible. So reviving federalism, I think, is in a very important way to get the deficit down.
Because the current deficit that we're running, it was like 20 cents on every dollar we were spending just 5 years ago. Now it's 30 cents. It's jumped from $1 trillion a year to $2 trillion. So something's got to give on the level of spending, because that, since the Biden administration has taken over, defies any ability to generate revenue that would come close to the levels that we're spending at. Do you agree with that?
As you know, we're in a death spiral now because the deficit of $2 trillion is going up and up and up. Long-term government borrowing rates gone up to 5%, and I don't see any forecast for interest rates going down. Rising interest rates, high debt and deficit, it's kind of a death spiral. We've seen what happens in other countries, and we've got to avoid that here.
So, Dr. Hendren, would you agree that anything to do with what this might do, say it's at $10 billion a year, is insignificant compared to the broader issue that we just spend way more than we can ever expect to take in?
So I don't want to understate the size of the problems that are faced with the budget in the United States, but I also don't think we should understate the size of the return to additional IRS audits. As I was saying at the outset of my remarks, every dollar that we spend there gets us back $12 over the long run. And I think we share, as you were suggesting, the idea that when we think about trying to raise revenue, we should do it in the way that has the least distortionary cost. And by our estimates, expanded audits, yes, on top earners is a more efficient way of raising that marginal dollar right now than changing.
But it is also nearly insignificant as a percentage of the total issue. Would you agree with that?
So I think, you can't audit more than the amount.
So you're saying every $10 billion counts, it's going to somehow lead to where we'd get rid of the $2 trillion deficits annually?
I think the math would not work out that if you just tried to close the deficit with just audits. I think that would be difficult. However, I do think that we should think about the marginal return on an additional dollar in there. I think audits look quite good.
And then do you have any suggestions on what we do structurally to live within what appears to be a very stubborn amount of revenue that we can generate in our current system, regardless of the tax rate, regardless of how much you'd audit?
Yeah, I guess I would be a little bit less pessimistic about the graph that you guys are showing with the percent of tax revenue of GDP going from 0 to 100 on the same graph. I think that's not very well emphasizing the changes in the tax revenue we can actually get. But I do think that there is, more that one would have to do beyond just audits in order to close the structural deficit. I think that's right, but I feel like I'd hope that we take the same level of kind of principled analysis.
Maybe like not spending more than you take in?
I think, look, I'm an economist. I'm happy to give you the budget constraint as a principle for us to think about. But I think what we should think about is for every dollar we spend, what's the bang for the buck that we get on that?
Dr. Sarin, what do you think of the modern monetary theory, where all of this just makes no difference, in that we can go into the future on the trajectory we're at now? Stick with that theory.
I deeply disagree with that theory, and I share your deep concern that we're on a fiscally unsustainable path. Debt to GDP ratios are going to rise to at least 119% of GDP over the next decade, and significantly more over the next 3 decades, unless we come up with real solutions. And I would be keen to work with you on them. I just want to emphasize that I actually think, like Dr. Hendren does, that tax and tax reform can be a very substantial part of that solution.
It's going to be $10 billion a year. Do you have any other ideas in terms of what we do other than just quit spending more than we take in?
So, Senator Braun, I want to emphasize that my estimates and Dr. Hendren's estimates are that over the course of a decade, by adequately funding the IRS, you can generate $500 billion. And so that's
not according to the CBO.
That's pretty significant revenue, and the reason for the differences between us and CBO has to do with the fact that taxpayer behavior adjusts in ways that are really important and aren't reflected in CBO's estimates. But I want to say that there are other things that you can do as well. And in fact, Kim Klossing and I put together a tax reform proposal that we hope to talk to you about ahead of 2025 that calls for around $3.5 trillion of new revenue raising that can come from things like equalizing the tax burden faced by capital and labor, international tax reform, corporate tax reform that have the potential to raise really substantial revenue and help us deal with our growing debts and deficits.
And you don't think that would be a wet blanket on the economy?
I actually don't. The estimates of sort of the impact of TCJA on investment are that investment went up, but very, very insignificantly relative to the revenue cost associated with decreasing the corporate tax rate from 35% to 21%. And so I do think that there is really substantial scope here for us to think seriously about revenue raising in ways that are pro-growth, not anti-growth.
Thank you.
Dr. Sarin, I wanted to come back to you on the questions that Senator Kennedy was asking you. He does that a lot to witnesses. He's a very effective lawyer. He's very effective at testing credibility, and I'll just be candid. Usually the tweets that he reads make me wince, like, wow, I wish that person wouldn't have written that. But I actually thought your tweet was not offensive. I haven't talked to any of the House members either about what they proposed, but let me tell you the way I understood that comment, and then you tell me if I was reading it wrong. The House passed a standalone proposal to fund the supplemental request for aid to Israel. And they could have just passed it standalone with nothing connected to it, or they could have done other things in the national security space, a Ukraine aid package, Gaza humanitarian relief. They could have done that. Instead, they did nothing else in the national security space. And what they wanted to do was significantly rescind funding to the IRS. Now, facially, that has no connection, absolutely no connection to America's support for Israel. So why did they put it in? Well, they described why they put it in, and then it has also been widely discussed, the second reason why they put it in. The reason they put it in was they said, well, we're coming up with a pay-for the Israel aid. Now, it was the opposite of a pay-for the reason you described, because if you take that money out of the IRS, the CBO and others said, the effect on the deficit would be very dramatic. And so they claimed that it was a pay-for when it was the opposite of a pay-for. And so that raises the question, there's sort of a pretext going on here. That's a classic legal strategy. When a reason is asserted that makes no sense, it's called a pretext, and then you try to get into, okay, what's the real issue going on? And the real issue going on, which they also described as, we think we can jam the Senate because the Senate supports aid to Israel. The Senate is likely to be forced to rescind the portions of the IRA that have helped constituent services, that have generated refunds quicker, that have enabled people to answer the phone on time, but we'll jam them because we're putting it onto an Israel aid package. And so that's the way I interpreted your tweet, and many were saying things almost exactly the same, that the lack of any connection between the IRS rescission and the Israel aid raised real questions, and the asserted rationale that it's a pay-for was completely inaccurate, which then raises the question about why are you trying to do it? Now, I think there are other circumstances under which House members will vote for Israel aid. So I don't think it's necessarily that they will only vote for Israel aid if you take an axe to the IRS. But by taking an axe to the IRS, they were trying to accomplish a goal that would have hurt my constituents, weakened customer service at the IRS, and increased the deficit. Did I understand your tweet correctly?
You did, Senator. And I should say, this actually isn't, and you know this, of course, adequate funding for the IRS has never historically been a partisan issue.
Right.
In that, if you look at budgets put forth by President Reagan, both President Bush's, President Clinton, President Obama, President Trump, everyone called for adequate funding of the IRS as a tool by which to generate additional revenue. Because when you go after the people at the top of the distribution in large profitable corporations who today are underpaying their tax obligations, that raises substantial revenue.
Yes.
And the idea of defunding the IRS as a pay-for or an offset is just so fundamentally backwards because it does the exact opposite of raising revenue. It decreases revenues in ways that I find deeply troubling, and so I definitely stand by what I said.
Well, I want to thank the witnesses for appearing before the committee today. Your full written statements, of course, are going to be included in the record. And for all senators, if there are questions for the record, they would be due by noon tomorrow, with signed hard copies delivered to the committee clerk and Dirksen 624. Email copies will also be accepted. And we would ask the witnesses to respond to any questions that are submitted by senators within 7 days of receipt. With no further business before the committee, this hearing is adjourned.